Welcome back, financial strategists and curious minds, to Financial Podcast. I'm your host, Olivia, and today we're unraveling a pivotal development in the global energy landscape, one that illuminates the evolving strategies of major players in the deep water offshore sector. We're zeroing in on SBM Offshore, a name synonymous with cutting-edge deep-water ocean infrastructure and their recent significant strategic move that signals a comprehensive shift in their operational footprint. This particular transaction highlights the dynamic nature of international energy investments and the intricate dance between global operators and national energy companies. This development revolves around SBM Offshore's decision to fully divest its equity interest in the lease and operating entities of the FPSO Aseng to GEPetrol. This isn't just another asset sale. It's a profound strategic repositioning that will see SBM Offshore complete its exit from Equatorial Guinea, an African nation that has been part of their operational map for some time. The agreement to transfer full ownership to GEPetrol, the national oil company of Equatorial Guinea, marks a significant juncture for both entities involved, fundamentally reshaping their respective presences in this key energy-producing region. This comprehensive divestment signifies a deliberate choice by SBM Offshore to refine its global presence and asset allocation, focusing their efforts where they believe they can achieve the most strategic impact and long-term value. The process of this exit will not be an abrupt one, but rather a carefully managed transition designed to ensure seamless continuity and operational stability. SBM Offshore has outlined an operational transition phase that is anticipated to last for up to 12 months. This extended period underscores a commitment to operational continuity and a smooth handover, ensuring that the complex, critical operations of a floating production, storage, and offloading unit, like the FPSO Aseng, are transferred efficiently and responsibly to GEPetrol. This methodical approach is crucial for maintaining stability in a high-value energy asset, minimizing any potential disruptions to ongoing production, and facilitating the comprehensive transfer of essential operational knowledge and technical expertise between the two entities. The 12-month timeframe allows for thorough procedural adjustments, comprehensive staff familiarization, and meticulous logistical planning, reflecting SBM Offshore's dedication to a disciplined and orderly exit. The rationale behind this major divestment is squarely aligned with SBM Offshore's overarching corporate strategy, which has been consistently communicated to the market and forms a core pillar of their business evolution. The company explicitly states that the sale of its participation in the Aseng FPSO is a strategic move to rationalize its lease and operate portfolio. This isn't an isolated incident, but rather a consistent pattern that reflects other recent transactions undertaken by the company as part of a broader, ongoing portfolio optimization initiative. Rationalizing a portfolio, in this context, means a strategic review and adjustment of their asset base, streamlining operational overheads, and often involves divesting from assets that may be considered mature, less strategically central, or simply no longer fit their evolving long-term vision. This process frees up significant capital and reallocates valuable human and technical resources that can then be directed towards higher priority growth areas or innovative ventures that align more closely with their future strategic objectives, ultimately aiming to enhance overall corporate efficiency, profitability, and their impact in the global energy transition. To truly appreciate the magnitude and operational significance of this divestment, it's essential to understand the capabilities and operational history of the FPSO Aseng itself. This is a substantial piece of offshore infrastructure, purpose-built and designed for robust and sustained energy production volumes. The unit boasts a remarkable processing capacity for 120,000 barrels of liquids per day, a figure that includes a dedicated capacity for 80,000 barrels of oil. Beyond liquids, it is also exceptionally well equipped to handle a considerable volume of natural gas, specifically 170 million standard cubic feet of gas per day, highlighting its integrated functionality for both oil and gas processing from the offshore field. Furthermore, its storage capabilities are equally impressive, providing a total storage capacity for 1.6 million barrels of oil, which notably includes dedicated space for up to 500,000 barrels of condensate. The Aseng FPSO initially achieved its significant milestone of first oil production in November 2011, commencing operations on the Aseng field, which is strategically located in approximately 1,000 meters of water within Block I offshore Equatorial Guinea. The initial contractual commitment for this unit, following the signing of the FPSO contract in October 2009, was for a firm period of 15 years, with built-in provisions for potential extensions of up to 5 additional years, illustrating its long-term operational significance and expected lifespan within the regional energy production framework. The historical context of the FPSO Aseng's operation further illuminates the current divestment, revealing a collaborative yet evolving relationship between the two key players. When the unit first began producing in late 2011, SBM Offshore had proactively entered into a joint venture with GEPetrol for both the ownership and the day-to-day operation of the facility. Under the terms of that original agreement, SBM Offshore held a substantial 60% share of the joint venture, reflecting their significant initial investment, their deep technical expertise, and their leadership role in bringing the complex offshore project to fruition. Equatorial Guinea's state oil company, GEPetrol, held the remaining 40%, representing their national interest and stake in the venture, ensuring local participation in the vital energy sector. This new share purchase agreement will fundamentally alter this dynamic, as GEPetrol will now acquire SBM Offshore's entire 60% stake, thereby granting the national oil company full, outright control over the FPSO Aseng and its continued operations. This transition of ownership signifies a notable increase in GEPetrol's direct involvement and command over a crucial national energy asset, allowing them greater strategic flexibility and autonomy in managing their domestic resources and contributing to the nation's energy independence. It is crucial to acknowledge that, as with any major corporate transaction of this scale, especially one involving international assets and national entities across different jurisdictions, the agreement for the divestment of the FPSO Aseng remains subject to several conditions precedent and various approvals. While the precise nature and exhaustive list of these conditions and approvals has not been publicly detailed, they typically involve a range of regulatory clearances from relevant governmental bodies in both nations, securing necessary contractual consents from other stakeholders or financial partners, and ensuring full compliance with all applicable international and national legal frameworks. These conditions are standard safeguards in such complex, multi-jurisdictional deals, ensuring all legal, operational, and commercial prerequisites are meticulously satisfied before the transaction can be officially concluded and fully implemented. Furthermore, for those interested in the financial specifics of the transaction, it has been stated that the financial details of the deal were not disclosed at this stage. This is a common practice in strategic divestments where parties may choose to keep specific transaction values confidential for competitive or proprietary strategic reasons. This strategic move by SBM Offshore should also be viewed within the broader context of their established corporate identity and their ambitious future agenda, which extends beyond traditional oil and gas. SBM Offshore prides itself on being acknowledged as the world's deep water ocean infrastructure expert. Their core business revolves around the intricate design, meticulous construction, precise installation, and efficient operation of sophisticated offshore floating facilities, which remain indispensable components of global energy production even as the world transitions. They explicitly articulate their pivotal role in facilitating a just transition, a deliberate move towards more sustainable energy solutions, ensuring that the world's energy needs are met responsibly while minimizing environmental impact. By continually advancing and refining their core capabilities, they are committed to delivering cleaner, more efficient energy production, focusing on innovations that reduce carbon footprint, enhance operational sustainability, and improve overall environmental performance. Beyond their traditional focus on oil and gas, SBM Offshore is actively pioneering and exploring new markets within what they term the blue economy, demonstrating a visionary commitment to diversification into areas such as offshore renewable energy solutions, floating wind, and other ocean-based sustainable industries. The company operates on a truly global scale, with a substantial and dedicated workforce of more than 7,800 employees, affectionately referred to as SBMers, who collaborate worldwide to deliver innovative solutions. Their corporate philosophy emphasizes being a responsible partner towards a sustainable future, diligently working to balance ocean protection with industrial progress. This divestment, therefore, can be interpreted as a calculated step in streamlining their portfolio to better align resources and focus on these forward-looking, high-growth, and more sustainable objectives, ensuring the company's relevance and leadership for decades to come. The sale of the FPSO Aseng is not an isolated event for SBM Offshore. Rather, it fits perfectly into a broader and consistent pattern of strategic portfolio management and asset optimization that has been evident in their recent activities. For instance, in other recent, highly notable transactions that have made headlines in the energy sector, SBM Offshore also completed the significant divestment of the FPSO Lisa Destiny to ExxonMobil. This particular sale was part of a larger multi-unit agreement where ExxonMobil further acquired 2 additional floating production units operating at the prolific Starbrook block, specifically the FPSO Prosperity, which was purchased approximately a year after the prior acquisition of the FPSO Lisa Unity. These serial divestments over a relatively short period clearly demonstrate a consistent and deliberate strategy by SBM Offshore to refine and optimize their asset holdings, potentially by divesting mature assets or those that no longer precisely fit their long-term strategic vision for various commercial, operational, or environmental reasons. Concurrently, while strategically divesting from some assets, SBM Offshore continues to aggressively invest in new, significant projects that align with their core competencies and identified growth areas. A prime example of this ongoing investment is the recent successful mooring of the FPSO 1 Guyana at the Starbrook block, a critical operational milestone with the anticipation of first oil production later this year. This dual approach of strategic divestment alongside significant new developments underscores a dynamic, agile, and forward-thinking corporate strategy aimed at maintaining leadership and relevance in a rapidly evolving global energy sector, balancing current performance with future opportunities. From SBM Offshore's perspective, while the divestment from Equatorial Guinea aligns robustly with their stated strategy of rationalizing their lease and operate portfolio and focusing on new opportunities, it inherently results in a reduction of geographical diversification. This could be considered a minor negative aspect from a purely risk management standpoint, as a company operating in fewer distinct regions might, theoretically, be more exposed to specific regional political instabilities or economic downturns. However, the company clearly views the strategic benefits of enhanced portfolio optimization, greater operational focus, and the ability to reallocate resources towards more innovative and sustainable ventures as overwhelmingly outweighing this reduction in geographical spread. Their unwavering emphasis on core, high-value assets and their ambitious expansion into future-oriented energy projects, including advanced floating energy solutions and pioneering initiatives for local emissions reduction, paints a compelling picture of a company actively shaping its future, rather than passively reacting to external market forces. This forward-looking posture is a defining characteristic of their current strategic trajectory, indicating a clear path forward for their business model and environmental commitments. For GEPetrol's the national oil company of Equatorial Guinea, the acquisition of full ownership of the FPSO Aseng is unequivocally a significant and strategically positive development. It represents a major strengthening of national control over critical energy infrastructure within their sovereign territory, and secures a greater share of the economic benefits derived directly from their domestic oil and gas resources.
By taking full command of the Aseng FPSO, GEPetrol assumes substantially greater operational autonomy, which could potentially lead to more integrated national energy strategies, enhance local content development through local employment and supply chains, and certainly increased value capture within Equatorial Guinea's energy sector. This transfer of ownership is also reflective of a broader global trend where national oil companies are increasingly asserting greater influence and control over domestic assets, playing a more prominent and often exclusive role in shaping their country's energy future and ensuring energy independence and resource sovereignty.
This intricate transaction between SBM Offshore and GEPetrol serves as a compelling illustration of the ongoing strategic shifts and profound realignments that continue to define the contemporary global energy industry. Companies across the sector are constantly evaluating their operational portfolios, adjusting to fluctuating market demands, embracing rapid technological advancements, and navigating the profound global push towards more sustainable energy paradigms. It's a complex and continuous dance involving strategic divestment from mature assets, targeted investment in new growth areas, and relentless innovation in both technology and business models, all meticulously aimed at securing a robust competitive advantage and ensuring long-term viability in an increasingly competitive and conscious global market. The transparency provided by companies like SBM Offshore through their established financial calendar and dedicated investor relations efforts offers invaluable insights for stakeholders to track these strategic evolutions and rigorously assess the company's performance against its publicly stated objectives and ambitious future plans. While future expectations always carry inherent risks and uncertainties, as is typical for forward-looking statements embedded in corporate reports, the strategic intent behind such a significant and well-planned divestment is unmistakably clear and forward-looking. That concludes our in-depth analysis of SBM Offshore's strategic exit from Equatorial Guinea with the comprehensive divestment of the FPSO Aseng. This is a story of corporate strategy, meticulous asset optimization, and the ever-evolving landscape of global energy production. Thank you for joining me, Olivia, here on Financial Podcast. We truly appreciate your continued support and engagement with our content. Remember to subscribe to the channel if you haven't already. Turn on those notification bells so you don't miss our upcoming episodes. And please feel free to share your valuable thoughts and insights in the comments section below. Until our next deep dive into the fascinating world of finance, keep your financial acumen sharp and your perspectives broad. Goodbye for now.